What if the biggest advantage in European venture capital isn't having more capital, but having less overhead?
There was an opportunity to build a pure European player active at Series A stage with a generalist approach.
While billion-dollar funds struggle with their own weight, Jeremy Uzan spotted something different.
We've seen a lot of inefficiencies in VCs, and we think that those inefficiencies are often connected to the size of the team.
The solution? Strip away everything that doesn't serve founders.
And it's much easier to execute with a small team. Be sure that they have everything they need to execute.
But can a 6-person squad really compete with the giants? The proof is in their approach.
Diversification is key. Different industries, different business models, different geos.
And the timing couldn't be better. A new breed of entrepreneur is emerging across Europe.
People coming out of their PhDs with already like a business brain. And this is very new and this is very exciting.
Jeremy knows exactly what he's looking for.
Honestly, very excited. We just need to find the right funding team, and we want those companies where you see actually the equity story and the exit path.
Discover how Singular is rewriting the Series A playbook, one smart bet at a time. Join us for the European VC podcast.
Here's a few words from our beloved sponsor. Discover where operational expertise meets innovation. With end-to-end coverage across fund admin, tax, accounting, compliance, ESG, and more, we take care of the complexities so you can focus on what matters most. Whether it's supporting visionaries or maximizing returns for your LPs, our tech-driven and comprehensive solutions empower you to achieve your goals with confidence. Partner with Ace Alternatives to streamline your operations and elevate your fund success.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
All right, everyone. Welcome back to the European VC podcast. Today, we are doing an episode that I have been very excited about. We're talking to Jeremy Uzan from Singular. Jeremy, welcome to the podcast. I'm not just excited because we've had some good conversations ahead of this, but also because you're one of the funds that speak a little less about yourselves in the ecosystem. So I'm looking forward to really dive in to Singular and how you think about the market we're in today.
I'll do my best. Thanks for having me.
So Jeremy, you're co-founder and GP. Your latest fund is 400 million. It's the second fund. You have 625 million under management. You are headquartered in basically all of Europe, so to say, and you're also investing pan-European with a target stage of C to Series B, but you're focusing more than anything on Series A. You are a generalist firm. You're doing anything from consumer to deep tech and anything in between. And you've made some notable investments that many of us will know, which is Basecamp Research, which is in tech bio, Aikido, cybersecurity, Typology, which is consumer, home and gaming, Oracle Oncology in tech bio as well. So did I get some of that correct? Did I forget something? Do you think there's something to add?
I guess like you must have been correct because I realized that everything is so generalist. We can do from C to B everywhere in Europe. We can do anything.
Yes.
I guess it's pretty true.
Which gets us to the perfect question to ask you then. Why should Singular exist?
Okay, that's a good one. So maybe to take a few steps back, just we're two co-founders. We created Singular 4 or 5 years ago now, and we've been in this industry for the last 20 years. So we're like, I would say, I hope, young veterans of the industry. On my end, engineering background, and I've been working in this ecosystem for the last 20 years. And this is my whole career, actually. 3-4 years as a banker, helping startups find money. And then I switched to the investment side with Rafi. So Rafi was my colleague for 8-9 years before we started Singular. I guess we kind of realized that there was an opportunity to build a pure European player active at Series A stage with a generalist approach. And I think this was possible because the last 10 years we saw a little contrast appearing in the market, seeing like the most visible brands or the best brands becoming naturally global, and seeing a lot of other brands, a bit smaller, becoming like pushed at early stage, usually seed stage, and very often on with a specialist approach. So naturally, we thought that there was a spot, there was some space that we could fill bringing something that we thought could be interesting to the market with a very simple approach, like trying to build this player, a bit like the best of both worlds between like a small and agile team, the look and feel of an early stage seed fund with the characteristic of the bigger platforms, meaning large ticket size, generalist, could be multi-stage, offering a platform team, helping the portfolio, like all the characteristics you can find attractive when you look at the biggest platforms, but in a smaller team setup. I'm still surprised, but actually it happened. So we raised the first fund in 2020, second fund in 2023, and for now we are executing as planned.
If I asked your LPs, because you won't say it yourself, you won't pick yourself up, what would they say? Why did they back Jeremy and Rafi?
Honest answer, I think it's when you're creating something, whatever it is, including a fund, I think you're backing a team mainly. We were in an interesting, I guess, situation where we had a decent track record, as we say, good track record, not a first-time team. Like we've been working together for 8-9 years at the time when we launched Singular. Now it's been 15 years. Pretty straightforward approach, nothing fancy, nothing complicated, plain vanilla approach actually, where you're actually chasing performance and that's it. We are not very thesis driven. We don't know exactly how will be the world in a couple of years. We are pretty convinced that the game here is to spot the best funding teams, assess if they're working on something that could really make sense and that could become pretty big, and support them along the whole journey. And that's it. And we naturally met the type of LPs that could be a good fit. We had from the first second a very honest and transparent relationship, and they decided to back us the same way VCs are actually backing seed founders or pre-seed founders. You think that they have a good vision, they have on paper a good track record, so statistically there's a good chance that they will do well.
Could you tell me about, because you have a philosophy around having a small and tight-knit team.
Yeah.
Could you tell me about that philosophy, why you think it's the right thing for you and why you think it's a good fit for the market that we have?
Usually VCs are pretty small animals, I would say. You don't really have like those massive teams you can find in industry, in like any other industry. That said, we've seen a lot of inefficiencies in VCs, and we think that those inefficiencies are often connected to the size of the team. We wanted to find something that was agile, flexible, the right level of velocity. And to do that, we think you need to find like great talents. You need to find the right culture. You need to be sure that everyone is running in the same direction. You need to find this kind of team vibe that will be very important. You need to be sure that everything is working well at a partnership level. So all those small characteristics like decision making, how you debrief, how you process deal flow, how you interact with founders, all those things are actually pretty important in the whole, I would say, success equation of a fund. And it's much easier to execute with a small team. It's less variables, I would say. So we decided to go for this from day one with the idea that we will just like opportunistically find the right people, fight to be sure that they are joining, keeping an eye on them to be sure that they have everything they need to execute and do their thing. And it's kind of working. So we're of course naturally growing. Now it's around 15 people, Singular, based between Paris and London. I think we will push a bit more. Maybe 20 is the right size, maybe a bit more. Again, like we don't have this fantasy of having like a 100, 200 people team. The fact that we're focusing on Europe, the fact that we're focusing on a certain stage, I think helps.
You're mentioning many things here, Jeremy. Agility, flexibility, culture, talent, that you make sure everyone's running in the same direction and that there's partnership alignment. I'd love to dig deep on each of them. If we think about agility and flexibility, how do you make sure that you build that into the fabric of Singular?
That's a tricky question, I guess. So you need to recruit people that are that will thrive in this type of environment. So you need to be sure that you find people that will be happy with flexibility and this type of agile approach. But also you need to be sure that culturally this is very clear that it's okay, that we are very open to find creativity within the team. We're very fine with having feedbacks from everyone from the team. When we do an IC, for example, when we do an investment committee, we're very happy if the analyst of the team is giving his opinion on the team, the project, the trajectory, the exit potential. It's actually a paradigm that you're building. You're building this like kind of safe place where everyone can really like say what they have to say and do what they can do.
How do you empower? Because I think with agility and flexibility and what you just described with the analyst being able to speak up and actually having a voice, how do you think about empowerment in the team?
It's a difficult question because I think this is happening naturally. We don't have like a recipe for that. Again, like I think we're respecting everyone. We are verbal about that. Like, so we're very fine with saying that the best company we'll ever find could come from everywhere, including it could be like the best friend of an analyst, you know. And the fact that we're saying this and we're not creating this kind of fake hierarchy where the smart people are at the top and everyone else is just like running everywhere to make sure that those guys are happy. It's more a question of culture than a question of like system and workflows. And, you know, I guess it's very much because like this is what we truly think. It's not like tactical. We don't think that this is the best way to extract value from people. This is how we think you actually achieve success or greatness. So the question is more about like finding the right people, being sure that you give them the right weapons so they can like do their thing, and being also honest. If it's not a good fit, you need to just be honest and say that it's not a good fit. But we're not trying to grow. We're not like optimizing for size, or we're not optimizing for those short-term characteristics. We're optimizing for the long term. I guess there is no other way, actually. Like if you're really optimizing for the long term, you need to find people that will join the team that are in the same mindset and that will play the game with those rules. And then it's very homogeneous. Everything is working by itself, I would say.
Yeah. Can you tell me a bit about how you think about recruiting and unlocking? Because I think at least personally, my dream is always to find self-efficacious, is that the word? People, employees that truly just run with the ball and bring an entrepreneurial mindset. But it can be difficult to find people where you have that at the same time as you also have high competence and that you also build the right culture for them and so on.
I think recruitment is very hard. I don't know if we are average, if we're good, or if we're bad at it. But what I can say is it's difficult. It's those processes where you need to make a kind of a quick decision on opportunities. And those opportunities are much more complex than what you're seeing during an interview. So I think we have a pretty good recruitment processes in place to assess what type of brain you have. So are you more like a scientific? Are you more a business guy? Do you have a good ability to create relationship with potentially founders? Are you like more a fundamentalist or a dreamer in terms of nature of VC? Do you understand the concept of building networks, how you leverage this to generate deal flow? Do you have the ability to assess an opportunity quickly? Do you have this kind of investor mindset where you are not looking exactly at a photo, you're looking at something in motion in a way, and you can actually like think about what it could become in the future? This, I think we kind of have a method to just detect this. The tricky thing is what you just said just after, which is finding people with this kind of grit, the fact that they're pushing 1% more, the fact that they have this like small entrepreneurial gene. This is very tricky. Like and this I don't have a magic recipe. I mean, very often it's connected to imposter syndrome in a way. So those people are pushing a bit more because they feel a bit insecure. But honestly, I think you cannot detect this in an interview. So I guess it's part of the game to know that you're doing whatever you can to assess those things, but you need to accept the idea that actually for the first 3 to 6 months, you will actually discover this part of the personality of the people you're recruiting, because you need to see them like in situations. Actually, you need to see them being active and see if they have this 1% more to put on the table, or if they don't. I'm not saying that if you don't, it's a massive problem, but I'm saying that if you have, it's a massive advantage.
And I think it's absolutely needed to grow in venture. Like if you really want to become a great VC, I think you need to have that part to your personality. I think it's very hard if you don't. I think you connect on a different level with founders as well.
Exactly.
Now, I'd love to ask you about your investment strategy. Could you just, if you line it out for everyone so they can hear, then there are a couple of parts that I'd love to dive a bit more into.
Yeah, honestly, it's a pretty simple one. We are focusing exclusively on Europe. In Europe for us is Europe plus UK, of course. We are Series A focus, but we can opportunistically invest at seed or B. And the third pillar is we're lead investors, targeting a pretty sizable ownership in companies. So a true lead investor. Last thing I can say is we target a 25 portfolio company setup. Average ticket is around 10 million.
One of the points that are quite key to you is diversification. Could you tell me about how you think about diversification and why you single that out as something that's more important to you than maybe it might be for the average?
So I guess this is like some kind of religion. I don't know if we're right or not, but we think diversification is key in this very specific asset class where you cannot really predict a lot of things. Diversification is a mix of a number of companies in the same fund. It's a mix of different industries, different business models, different geos. So yes, diversification is key. If you look at our portfolio, you will see a lot of different stuff. And as you said, like going from pure consumer brands to tech bio is like, it's really like, it's massive. We're fine with looking at anything. The first element in the scorecard is trying to find amazing funding teams. And once you have that, you kind of follow a bit their lead. Those amazing founders, they kind of know what they're doing. So there's a high probability that if you find an amazing funding team, they will like bring you to something interesting. I mean, all this, all investors know that. Like, you never know if you're betting on the right project. It's highly probable that there will be some changes, some pivotal moments and stuff. But the thing that is actually like never changing is the team you're betting on. And this is our approach. It's pretty simple. The only thing I could add is we like full diversification, but we're very happy to have at a partner level to have some like let's say swim lanes. Like it's fine to be a partner that is a bit more sensitive to B2B or a bit more sensitive to B2C or to cybersecurity or to, I don't know, like tech bio or but at a more junior level, we're fine with like having a generalist.
I guess it's not just fine, it's actually a good thing, because oftentimes you need to lean into your strengths as a, and your networks tend
exactly.
to
Exactly. It is difficult to know if it will have an impact on performance because you're a better picker, or if it will have an impact on performance because you will be picked more often by founders that think you're actually an expert on their field. This I don't know.
And so honestly, it's probably both, right?
Maybe.
That's at least my philosophy. Peter Thiel famously has said that diversification is what investors do when they don't know what they're doing. He probably talks also a lot heavily there about the very broad portfolios, which yours is obviously not. However, I would love to ask you, because diversification to me is a bit like, so there's, you have a bit competing views, right? Or competing balances, because on the one hand, you have a set amount of deal flow and opportunities that you look at that are truly remarkable. And in 1 year, they might fall more in one vertical or one type of business model than another. So that could then tell you that I need to go where the opportunities are, and we're finding that we need to go for that reason a little too heavily into AI. right now compared to where we actually maybe would like to be, but it is where the opportunities are right now. That might be one perspective. You also have another one, which is, well, most LPs would have you fit into their portfolio model as one of many. And for that reason, they don't want you to diversify as much because they have their LP strategy gives them the diversification they want. They want you to just chase alpha as much as you can. How are you thinking about this? How are you verbalizing it when you're thinking around diversification?
So I guess two things. The first one is to come back to what you said on diversification. It doesn't mean that we're doing everything at the same time. It means that actually, if you look at what we've been doing, we are a temporary specialist. There is a moment where for 6 months, 1 year, where we just build knowledge and we build network on a specific category of companies. And this is the moment where we'll just like filter out and find and spot the right founders and stuff and do a couple of investments. So usually this is how it's happening. But we really have the impression that this ecosystem is moving so fast that it's actually quite difficult to start operations in 2020 and say that you will be a fund dedicated to crypto. It actually doesn't make sense to us because it's very difficult to predict if crypto will be a massive thing in the coming 2 to 3 years, which are your investment period, or if it's actually right now a good moment, but in 2 to 3 years, some new stuff will appear. So we have, I guess, this type of approach where we are trying to chase a couple of interesting trends, not necessarily mainstream, but still for example, last year, we decided to invest time and energy in tech bio projects, and we found amazing stuff. It doesn't mean at all that 2 years ago, we thought tech bio will be a thing for us. It's just that we met founders, we realized that this was interesting object in terms of risk-return ratio, defensibility, leveraging the right technological building blocks and stuff. So we did it. I don't know if we will do 3 or 4 more or if this is fine, but if I'm looking back at the last 12 months, this is where we were focusing a bit our energy. And on your second part of the question, which is LPs, I'm sorry to say something that is very basic, but we are actually not optimizing for LPs. We are optimizing for performance. This is very basic, but actually this is very true in our case. We are honestly fighting for performance. It's not like a marketing thing, or we are honestly fighting for performance. And this will actually connect us to a certain type of LPs. If you're a massive LP and you need allocation and stuff, maybe this is not for us because we will not tick all the boxes. But if you're an LP that is looking for performance and you just add blocks, you add cards to your card deck, thinking that each card can actually deliver performance on its own, and maybe some cards will be competitive and stuff, and you don't care, you just want to maximize the probability of performance, then we could be a good option. It's easy to say because of course every VC wants to say that they are performance driven, but this is honestly how we approach everything, including the relationship with LPs.
I always find LP portfolio construction so interesting because it is exactly as you say. You have some on one hand that they are trying to build a portfolio that gives them exposure across all of Europe as an example. And then for that reason, they will pick 1 or 2 managers in the Nordics as an example. And then when a third one comes by, it really has to be something very particular for them to do that, because they would say, otherwise I have covered the Nordics. But then another LP would say, no, I'm going for the best managers. And I think that the third best manager happens to be in the same region as I just did 2 other investments. I'll still do it. It's an interesting conundrum as an LP to navigate. And then you end up with exposure to the same assets and all these things. So a lot we can talk about that.
Yeah.
But again, if 3 good managers have picked that asset, well, I guess it's a good one to have 3x exposure to.
I guess it's part of the game. When you're an LP, it's part of the game to know that actually you're giving checkbooks to people you trust. And then you need to cross your fingers and hope that they will just do a good job with it. And you will have the feedback loop in 10 years. And so for 10 years, you need to trust actually the team you picked.
I'd love to ask you about these sprints, deep dive sprints or whatever we might call them, meaning, seems like something is happening in sovereign compute. Let's spend 6 months digging into this. We've met 3 very ambitious founders. We can see some tech inflections happening. We can see some adoption inflections happening. We can see regulation is lining up. We should probably give this an extra look. Could you tell me about what triggers that, how you allocate team focus to it, and typically also how quick are you then from seeing those first signs of something interesting to pop up and actually execute and do the first deal? Or do you do three, or do you have a rule that we try and really stay in that exploration mode for a bit before we do the first commit, unless the stars align?
Actually, it's a good question, and it's a tricky one again, because we change our approach on this a couple of times already since we started. There was a time, so very basically, there was a time where we were like having a very, very structured approach on this. Like we were really trying to have like deep dive every 3 months with a dedicated team, you know, the right Notion page with everything you need, all the studies and stuff, with like formal conclusion, a list of companies that could fit, everything. And then like you attribute task to people in the team, and you try to be sure that you've seen everything, and then you have a conclusion, and it was not really working for us. Like, I guess when you start to do this, you're losing what we talked about at the very beginning,
Yes,
which
I
is
think
this.
so too.
Exactly. So this agility and like this ability to be reactive and stuff. So we did this, and we realized that it was not a good fit for us, that a lot of this information that you are building and storing somewhere, actually you will never use again. Like we could feel the inefficiency. And so now what we're doing is actually just going back to the basics. We try to meet amazing founders. That's it. And we are open-minded. So if we, for whatever reason, we meet an amazing team and they're working on space tech, we will not have, this first reaction saying like, yeah, I'm not sure it's for us. We don't know actually. So it's a good opportunity for us to understand from the best. This is an amazing team. They decided to dedicate a lot of time, energy, a big part of their life to this specific thing. Why? And we try to understand. And it's thanks to this one process, we're going from 0 to 1 on understanding the space. In this case, the space tech space. And it's the same with tech bio. It's the same with anything that is at the cross path between science and tech, all those complicated stuff. We start with one opportunity. We don't start with a market view. We start with one opportunity, and the opportunity is like opening a bit our eyes on the market. And then by capillarity, if you have one amazing contact, this contact will push you new contacts. And those are like usually statistically good contacts. So I guess now we have a less formal approach. We have, of course, like offsite and stuff, and like a SWAT team working on some stuff. We have some people in the team that are the specialists of this and this, but it's much more organic. It was maybe 2 years ago very structured, and it was a bit inefficient. So now we like the idea to have this organic approach. We're very open-minded. We respect any opportunity. We don't have those. I don't know if this exists in English, but this a priori where you're just like, space is not for us, actually. Like we kind of know it's not for us. It's not for us until the day we find an amazing team and that they can just actually show that it can be an amazing business and that it can work with our system and time frame and stuff. So being open-minded, taking everything seriously, and deep diving each time you have an opportunity that is important, leveraging this moment to build knowledge within the team. This is actually how it's working.
I'd love to ask you about how AI has changed or affected your process of understanding a topic. I ask because, as an example, it's a small one and random one, but I have started forcing myself to, instead of opening up my news app constantly during a day, I pick a topic early in the morning, which is the one I want to understand better, typically driven by the news. So tariffs, everyone's talking about. Instead of opening up the same news about tariffs, I would then prompt my deep research in the morning to tell me, give me a deep analysis of how tariffs work and so on. And then what I open during the day when I feel like checking the news, I go and read that report which was generated, and then I chew through a well-founded report during that day. I can only think that, again, back to building these knowledge bases, which I could see mean a lot and be very efficient and powerful to have inside a firm before. I can see a lot of knowledge you could have built up over the years that now is made completely redundant because you can have an AI troll through all the available information that's at least publicly out there. So not people databases, not connections within the industry, not all the hard things, but all this aggregate analyst data that you would pull together. It's all there right now. Could you tell me how do you use AI in your process today? Has it changed anything, or are you saying it's always been so people driven? It's not really changing much.
We are in this situation that is always a bit difficult to explain, but like we are very much connected to tech, and at the same time, it's a people business. So it's kind of frustrating in a way because like you can feel that you could dramatically improve efficiency if you had like tech everywhere and if actually a robot could replicate what we're doing, but it's a bit more difficult than that. I guess you can outsource, delegate a lot of things to technology if it's about information. But at the end of the day, you need to win those deals. You don't need to detect those deals. The game is not about like having a fake portfolio of amazing assets. The game is actually to have a portfolio. The human connection, this ability to build trustful relationship quickly with founders, to spend time with them, to be in the room, this is very important. So depending on where you are in terms of seniority in the team, you are more on the information side or more on the relationship side. At a senior level, you're actually spending a lot of time in the room, talking to founders, meeting them, building those relationships. That said, we are, of course, absolutely convinced that we can find amazing hacks in terms of efficiency, productivity, and stuff. So it's interesting that you're asking this because like a couple of months ago, we created an internal initiative called Singular Academy. This is the code name, where we share knowledge, information within the team. So we have in the team, we have our champions on a lot of things, including the use of AI tools. And we will just like meet with the whole team. One of the person from the team will actually present to the whole team how they use something. So we had already, of course, a couple of sessions on AI tools. And so like just vertical by vertical, someone within the team will say like, this is how I use those tools. So as an example, as a very basic and simple example, don't use ChatGPT to reformat your text. This is actually something we were doing 2 years ago. This is how you should actually train your own ChatGPT. This is the type of information you should feed to this ChatGPT. You should like develop your own GPTs with a different data set. And this is how I'm using it today on a daily basis. And just like, please look at this wow moment and just like experience it, because actually this is the moment you will realize that you need to switch and you need to do something. So this is what we're doing. Honestly, it's far from being rocket science, but it's an ongoing journey. We need to just find those hacks to cut some corners, to find efficiencies on our daily work. But I mean, as you said, it's at the senior level, it's still very much a people business. And it's not the case at the junior level, where you need to just actually have access to all this data and like spot a couple of interesting data points and be able to just compare companies and stuff.
Jeremy, I know that I want to talk about Europe as a mature early stage playground. I know that in the post-COVID era, you have said that you're seeing a reconcentration of talent in the key European hubs. I'd love to understand what you're seeing and how it's affecting you.
This is a pure observation, so I don't know if it's something that everyone is saying. But if you compare Fund 1 to Fund 2, in our case, so Fund 1 is a pure, really like just post-COVID fund, let's say around 2021. And Fund 2 is more like 2023. In Fund 1, you have a bit less companies than in Fund 2, but you have twice the number of countries. So our observation is that just after COVID, talents were a bit everywhere. I guess during COVID, everyone came back to their places and like stayed there and started to work remote. And so we were like seeing those cool companies popping up a bit everywhere. And I guess naturally, the old school motion came back, and talents reconcentrated around the main hubs. Main hubs for us are Paris, London, and the duo that is Berlin and Munich. And we really see now a highly concentrated type of situation around those 4 hubs. It doesn't say that we're not looking at other hubs. We're covering around like 10 secondary hubs outside of those main ones. Still, if you look at the portfolio, it's highly concentrated. I'm not like a sociologist, so I don't know exactly how to explain that, but this is our observation.
Jeremy, I'd love to ask you, because I don't understand the French and Paris ecosystem as well as I would like to. I'd love to ask you, everyone's hearing about the AI epicenter, of course, but could you tell me a bit about the dynamics that you're seeing around Paris these days?
So I would say basically it's an ecosystem that changed a lot the last 15 years. I guess Paris was a bit insular in a way. Yeah, this type of situation where you have like mainly French LPs backing mainly purely French VC firm, backing French companies, exiting through like French acquirers. This has been the case, but for a long time, we had this impression that Paris was a bit outside of the European ecosystem, which was not the case with Berlin, for example. And this changed a lot, I think, the last 5 to 7 years, something like that. But we've seen those wave of repeat. It's a question of maturity, I would say. This wave of repeat founders, a change of mindset, more and more founders having this international mindset, usually having lived outside of France for a couple of years and bringing different type of culture. We've seen also the first big exits. This created a wave of international capital coming to France. And naturally, it became like a very interesting ecosystem on its own. That said, you have like the AI layer on top of it. So it's something else. It's very different. It's not connected to what I just said. It's been a very long time that French engineering schools are actually producing amazing engineers, usually very strong at mathematics. So maybe 15 or 20 years ago, you had the best traders or the best quants internationally coming from France. And naturally, like those amazing mathematicians shifted interests. So then they started to work on what we now call AI. At the beginning, I would say machine learning, deep learning. There was a moment where all the deep learning engineers or machine learning engineers in the Valley were actually French. So you have those like stories where you were visiting those amazing tech leaders West Coast, and actually at the tech floor, everyone was speaking French actually. So this actually happened. And it was like, again, like 10, 15 years ago. French AI ecosystem is actually not a surprise. Like it's actually pretty logic. Of course, we're very happy to have this. I think it's a very strong unfair advantage. An ecosystem is made of those moments where you have a concentration of talents, of interest, you have visibility, you have those amazing talents that are becoming entrepreneurs, building amazing stuff with the right energy and ambition. And we're like seeing this like right now in France. So that's amazing. That's it. So I guess like the fact that we are this European VC having an edge, I would say, on France is actually a pretty cool positioning, and we're pretty proud of it.
I don't know if I would call it critique necessarily, but one characteristic that's often...
You know that us French people, we like critics. We love critics.
Yes, because you'll then be very offended and throw baguettes at me. No. Jeremy, one critique of the French ecosystem, venture ecosystem, has been that it's maybe been a bit very French focused. Do you think that's a fair one still, or what are you seeing happening there?
I guess the question here is the definition of ecosystem. Yeah. So I guess it's if you look at it generally, I would say it's still, I guess, the case. Like I would say, if you compare Stockholm or Berlin to Paris, Paris is still a bit like focused on its own dynamics, I would say. But it's I would say it's a generality. It's not like it's not really happening for the best companies. So it depends really on what you're looking at. If you look at the ecosystem in general, yes, it's actually, as you know, it's a bit pushed by public policies and stuff. So this is creating a motion in a way that is pushing the ecosystem in its whole. But if you look at the best companies, the best founders, the repeat founders, the exits, if you look at this very small part of the market, this is super international. Like we see amazing French founders that are building like amazing companies in France, in Europe, outside of Europe, like becoming leaders in the US. And this was not existing like 10 years ago. It's really happening now. So I'm honestly very much optimistic.
Which is also where I think that investors have the prominence of investors with the right mindset is actually important for an ecosystem as well. Because
of course,
French-oriented investors will also drive founders that might go in either direction towards one certain direction. And because we are stewards in the end, especially with early teams and in an emerging ecosystem where you have yet to really have people that have built their own path and built that trust in themselves as an ecosystem and in the ecosystem itself. I think that when we then have investors that are a bit French-centric or Denmark-centric or whatever, you compound the problem, so to say. Whereas now that when you have a bunch of exited entrepreneurs that are investing back into the market and people like yourselves, First, OVNI, that are really trying to say, yes, we focus on French founders when it comes to First and OVNI, but we're very much saying, guys, let's look to the rest of the world.
And I think it's really happening. And like when we are investing, we are 100% of the time, or close to 100% of the time, fighting against the big brands in Europe or in the US, including in the French market. So if you're an amazing French team, you can actually be backed by any VC, including West Coast VCs. It was not the case 10 years ago at all. Now, like, it's less an island in a way, the founders are ready to attract this international capital, and this international money is coming with international mindset. So you change the dynamics at a board level, you change governance, you change ambition, you change actually, like, marginally, you change the equity story of those companies. And this is happening. So more and more in those ecosystems, including the French one, you have new role models that will actually influence all those new generation of entrepreneurs that are coming. It's becoming like the norm to be that ambitious.
Yeah, exactly. I want to, before we close, Jeremy, I want to ask you about a movement that you're bullish on, which is the emergence of sciencepreneurs, a new generation of scientists who also have an appetite for business. I'd love to ask you, tell me why you're bullish here, what you're seeing.
So I would say first observation is very basic. We looked at researchers 10 or 15 years ago thinking that they could become amazing entrepreneurs because they had access to amazing technology. 10 or 15 years ago, those researchers were very research minded. So they were like just focusing on what they were like finding, playing with those sciences and technologies and stuff. And we needed to just like really like force a bit the machine to try to find a business out of those findings. It changed so much. Now we really have people coming out of their PhDs with already like a business brain. And it's very, very obvious now. Like you see those young talents coming out of a pure scientific background and having this business mindset, startup mindset. They know they want to build a company. They actually oriented their research thinking that this could become a company. And this is very new and this is very exciting. Now, why is it exciting? Those sciencepreneurs, I kind of like the word. I think it's very interesting because they build different type of assets. So if you think about a company, let's take the example of TechBio. You have those companies that are everything at the same time. They have the usual business model of a SaaS company, for example. So they're actually delivering revenue, growing, delivering good margins and stuff. On top of that, they have the cool positive volatility of biotech companies. So overnight, they could find something that could be a game changer in their trajectory, in their equity story, in the value of the asset they're building. So you have this amazing thing where it can actually change overnight. And on top of that, as they're trying to find those amazing assets, they're actually building an asset base, which is the defensive move. So those companies will always worth something in a way, because even if they don't find anything amazing, they're actually finding stuff. So they're building this like kind of proprietary data set in a way, scientific data set that will always have some kind of value for an acquirer. On top of that, they have like their usual business. And on top of that, they have this crazy volatility on the upside. And we found more and more of those companies. Yeah, we're honestly very excited. We just need to find the right funding team. So not fully research, a mix of research, tech, and business. You need to find companies that are close to the dollars. So we don't want companies that will make the first euro of revenue in 5 years. We want like them to be close to monetization. And we want those companies where you see actually the equity story and the exit path. We don't want to just like see those amazing objects without any exit scenarios. We want to see from the beginning who will buy that, for what reason, for what type of price, and how they will value these assets. If we have this, it's honestly like the type of object that are ticking a lot of boxes.
Yeah, you just gave a great lesson data for why tech bio is so interesting today, because I do think it is. And it's also what some people are talking about when they talk about Google and the project that they have going on in this space. It's just something that no one could imagine that would come out of a tech company before, but now it is. Jeremy, thank you so much for joining me for this podcast. It was incredible. It was as good as I hoped for when we started.
It was a true pleasure.
Here's a few words from our beloved sponsor. Discover where operational expertise meets innovation. With end-to-end coverage across fund admin, tax, accounting, compliance, ESG, and more, we take care of the complexities so you can focus on what matters most. Whether it's supporting visionaries or maximizing returns for your LPs, our tech-driven and comprehensive solutions empower you to achieve your goals with confidence. Partner with ACE Alternatives to streamline your operations and elevate your fund success.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.